Welcome to the stock play of the day. Today's stock is going to be PayPal. We'll discuss should we play or should we pass. My name is Brian Overby. I am the Senior Options Analyst at Ally Invest.
And I'm Lindsay Bell, Chief Investment Strategist at Ally Invest. Brian, I think the best way really to start the show is to take a look at the broader markets in general. And what we're seeing this morning, on this Monday morning, is green across the board. The Dow, the S&P 500, the Russell 2000 even is up. So we're seeing a continuation, again, of this strong trend that we saw through 2019, where we had almost 30% upside in the S&P 500. Continuing in the first several trading days of January. In fact, we're up 1%, and we've had only about 7 days of trading so far, so that's a really strong trend. It definitely is a good sign for the market brought longer term over the rest of the year. Usually when you see a strong start to January, you can see positive returns in that year. So that's what's looking good. But today, despite the fact that there's not really any economic data, no big news stories that are coming out this morning, corporate earnings are really off the table until later this week. We're still seeing upside, which is great. But as the week rolls on, the data is going to come really fast and furious. So I think anything can really happen this week. China is here. I think that's one thing that investors are really focused on is the trade deal with China. We're expected to get that phase 1 signed by Wednesday. The Chinese delegation is showing up in Washington today. So that'll be something that definitely can move the market one way or the other if there's any hiccups there. Corporate earnings. The fourth quarter earnings season is kicking off tomorrow. JP Morgan, the banks, the big banks, especially Bank of America, Citigroup, also Tuesday and Wednesday. We'll hear from more of those guys. So it really will be, we'll get a feel for the consumer too, because the banks are dealing with the consumers every day. And then on an economic front, we'll get not only CPI data, which is really important because the market's a little bit nervous that we're going to start to see inflation creep up this year. We'll see what happened in December, though. Especially on Friday, we got that jobs number that was a little weaker than expected, which is why Friday was one of the few down days that we've seen so far this year. I know there's not that many days in the year so far, but inflation data will be very important from the consumer CPI side and also the producer PPI side. We're going to get retail sales. We're going to get consumer sentiment at the end of the week. Industrial production also. And I think I'm leaving out a couple other big economic data points, but the point is that there's a lot that's going to be happening this week for us to keep our eye on. So that's how we're setting the table going into this week.
And one little thing that I can add is the VIX. The VIX has started to come down, so it's obviously, I think it has a lot to do with the China news. So we see the VIX going down towards the 12 level. It's starting to get near year lows. So in general, that means that investor sentiment, people aren't as scared out there. So a lot of times the VIX index is an indication of the fear index.
Well, and that's interesting too, because if you think about the valuation of the market right now, we're looking at a PE, a forward PE of 18.6 times on the S&P 500, which is a premium compared to historical average. You usually see about 15.5 to 16, but that's okay when we have interest rates that are so low and the Fed standing pat, inflation that is low. You can have extended multiples on the S&P 500. So we'll see how that works out over the year, over the course of the year, and then also, again, earnings are really going to be important because we're expecting a 2% decline in fourth quarter earnings this quarter, which again begins this week. So we'll learn a lot about that. But let's take a look at our stock play of the day, which today we chose to take a look at PayPal. But right before we do that, why don't we remind our viewers that if you do have any questions, we're going to have time left at the end of the show to directly answer your questions here. So be sure to type them out in the box below, and we'll get to them as soon as we can at the end.
Yes, definitely. And here we have the chart on PayPal.
Yeah, so PayPal here, what is this? This is a 3-month chart, which is a very interesting timing. You see a big move down from the summer last year. Is this a 3-month chart? No, this is a...
Yeah, it's a little bit. We're going back to August. We zoomed in a little bit on it. So going back to August of last year. You
see the big move down from the summer of last year. That was about a 15% move down. We've begun to rebound beginning in November. I think after third quarter earnings, investors got a little more comfortable with what was going on. It was like a global growth scare that really kind of took hold in this stock. PayPal was a great stock last year. It was up about 28%, which is really impressive, but it was about in line with the market. So
if you go back, you see the chart from all the way from last year, that big run up.
Yes, exactly. And where we're at today is about 5 percentage points below where the summer peak was. So we still have room to get back up to that level. I think the company's going to report earnings at the end of January. But this is definitely a stock that is in a really hot sector, and that's electronic payments. You're really seeing the world, society, move from what used to be a cash and check-based society to electronic payments, to doing payments over mobile, and these guys are front and center within that space. So there's a lot of growth opportunity for this company with regards to the trends that we're seeing there. That space is growing. The mobile payments, the online payment space is growing about 17% per year. These guys own, I think, about 15 to 16% of the market, and that should continue to grow as the industry grows. So these guys should certainly be a winner. If you remember, PayPal spun out of eBay in 2015, and then they acquired, I think it was in 2016, the parent company of Venmo. So these guys actually own Venmo. So for the younger generation that is watching, I know I love Venmo. It's kind of like it's a bit of a social media app for the payment space, which is kind of cool. End up wasting a little too much time on it here and there, but it's there's a lot of growth there. The cool thing about Venmo is that PayPal hasn't even really begun to monetize their millions of users yet. So that's one area where we're going to see significant revenue growth for PayPal in addition to just simply industry trends. So those are some of the strong backing trends that are going to help this stock going into 2020. But you know me, I always look at earnings and I look at valuation for any given stock. So the earnings growth for 2020 here is expected to be, I think I wrote it down here, 14%, which is a deceleration of 26% earnings growth that was expected in 2019, but still very good when you think about the S&P 500 is only expected to grow about 8%. From a valuation perspective, what you saw in this chart here is, while this is just price, earnings valuation bottomed out at 30 times PE here at the end of October, it looks like, and that is actually the 10-year average PE for this stock. So it seems like it's becoming a floor for the stock. Right now, as it's moved up, we've seen valuation increase to about 33 times on a PE basis. But back when the stock peaked in the summer of last year, the forward price to earnings ratio was about 39 times. So 33 feels a little bit better. Definitely, I think there's room for multiple expansion, and then also bottom line earnings growth to really drive this stock going forward. So that's something we'll definitely be watching when they report earnings at the end of the month. You also have to take this in comparison too with Visa and MasterCard are other two major players in the space. The three of them, by the way, within the technology sector of the S&P 500, they make up about 13% of the market cap of just that sector. Visa MasterCard had a much better 2019 than PayPal. Remember I said PayPal was up about 28% in line with the market? Well, I think it was Visa was up 42% and MasterCard was up 58% last year. So you have more of an opportunity, I think, if you want to get into the payment space with PayPal versus those other two names, which are also very high quality. A lot of analysts on the street have high ratings on them, but buy ratings or overweight ratings. Today, you see the stock is moving very nicely, up 2%. It got a positive mention by Bernstein, who upgraded the stock last week. So they're really kind of pushing that stock going into earnings. What are you seeing within the options?
Yes, and you're right. Earnings are the 29th of January, which I think everybody's announcing earnings on the 29th of January from what I saw.
Okay, the payment space.
A lot of the FANG stocks too are jumping in. A lot of the tech stocks will be announcing around that time frame. Okay. But if I look at this chart, I mean, one of the things to just kind of make note of, it'd be really interesting if we could get a push up past earnings. Like if we can get a push up above this high and give it room to run. It's always good to make a new 52-week high. That means the stock is moving well, and that's always a good trend to be in. Now in the option space, I do want to point out that I do actually own some shares of PayPal, but it's just shares, and we're not talking about options. Today we're going to look at a shorter term play that's based around earnings. And if I go to the Ally Invest option chains here, we do see the stock is actually up since we started chatting here a little bit. It was up $2 when we were looking at it. Now it's up $2.57, about 2.25%. But
maybe we had something to do with that. I don't know.
Oh, I'm sure. If I look at the earnings date, though, I see that on 1/29 is when they're going to be announcing earnings. I always want to double check that date. And one of the things that I usually look at to make sure that is I like to look at the option chains. The option chains are all knowing. So, for example, here we default to the shorter term expiration. And remember, when we look at our chains, we have on the left-hand side over here, we have the actual call options. And on the right-hand side, we have puts. We're going to be a little bit more bullish on PayPal today going into earnings, but we're going to do a trade that focuses on that earnings date. Okay, so how do we want to check to make sure that the options market thinks that the earning date is in that expiration? Here's how we do it. Okay, I'm going to focus on the January 31st expiration date. That is the first expiration that we're going to be looking at here, and then I'm going to also look at the January 24th date. Okay, so now if I pull those up, and I'm going to focus on the call side, and I'm just going to look at the implied volatility on the 116 strike. Now I'm going to scroll over here a little bit off screen. We'll see that that's trading at about a 20% implied volatility. If I go down and I scroll down to the month that we're going to be actually trading in, and we look at that same strike, that same expiration, we see that's a 33% implied volatility, all right? So now if I come back on the screen, what does that mean to me? That means that the marketplace knows that there is a news event. The marketplace is, the expiration, excuse me, the expiration, yeah, may I grab a little drink of water? The expiration that has the higher implied volatility, thank you. Appreciate it.
The expiration date is because of earnings.
Because of earnings,
the announcement.
It has a little bit higher implied volatility than the first expiration. Okay, so here's what we're going to do. The expectation is after earnings, the stock will make a move. That's just the normal process. So before earnings, leading up to earnings, a lot of times the stock just kind of will level out and stay fairly flat. And that's exactly what the implied volatilities are telling us. So we're going to do what's called a long calendar spread. And a long calendar spread, even though a lot of times it looks to just take advantage of time decay in the option contract, in the options marketplace, we're going to do it a little bullish. Since we got a bullish forecast, we're going to do a long calendar, and we're going to do a strike that's out of the money on the call options, anticipating that the stock will go up to that strike price. So if here's the options playbook. Everybody, this is available to everybody at optionsplaybook.com. It's the book that I authored. But if I look at the long call spread, the long calendar spread with call setup, usually you're looking just at strike A. So we're going to sell an expiration that has just that strike, that's a near-term expiration, that's going to have a large, fast rate of time decay in it, and then we're going to buy a further out expiration. Now, the one thing that is really different about long calendars is that if I'm doing a long calendar, I want the option contract that I own to increase in volatility, and I want the option expiration that I sell to decrease in volatility. I want that to go away. So I'm not looking to be in this trade all the way to that expiration date. That's not what I'm trying to do here. What I'm trying to do is I'm hoping that the front month option contract will decay fast, and the back month option contract will increase in implied volatility. And that's normally, and I got air quotes here, that's normally the case when it comes to earnings dates and option expirations. So let's get back to the strategy, and let's look at it inside the Ally Invest platform. So the expiration that I'm going to sell does not contain earnings, and so I'm going to go up a little bit in strike, right? The stock is right around 115.5. We're going to sell the 118 strike. Now that means that's where we'd like the stock to get to in the short term. We would like to make that type of run. And then we're going to buy the 118 strike, but we're going to go out to the next expiration, which is, as I said, much higher volatility, almost 12 percentage points higher in volatility. All right, so now if we look at that trade, we see that and I'm going to pull up the profit and loss graph here too. 1 second. Zoom in a little bit on it, and I'll discuss both of these things. So if I look at this, what we see is this is a much more expensive option contract. We're going out just a couple more weeks in time, but we see that that option contract is trading at the midpoint, right between the bid and ask at $2.32. The front month option is it's only a 64-cent option. But when you think about that, we're using that to try to pay for our long option contract. That contract that we really would like to have is the longer term January 31st expiration, right? Because that's the one that's going to give us the bang for the buck. So if I scroll down and I kind of look at this trade, we see inside our profit and loss graph, and I'm going to leave it right here. Inside our profit and loss graph, this is where the current stock is at. This is where we'd like it to run to. So in the short term, if the stock goes to 118, we're going to want to get out of the trade. And one of the things about calendar trades that makes it a little bit tough is that it's hard to say, well, what is my upside on the trade? Because I'm dealing with two different expiration dates. But I always do this. If it does get to 118, you just want to get out. You set an alert, you see it at 118, you get out of the trade, you move on, you go to the next trade. Now, let's say it's a little short of that. Let's say it goes to 115 or 117, or even worst case scenario, it starts to go down, it drifts down a little bit. Well, you can always let that front month option contract just expire worthless. And then you have a long call option, and you can ride that into earnings if you'd like to. So there's a lot of different things that you can do with long calendar spreads, and it's part of the reasons why I like to do it this time of the year. Like, I don't want to do this trade if earnings are 3 months out. But if it's 1 month out, I don't mind. This is the time frame that I like to look at long calendars.
And it's best to do the long calendar spreads around earnings or maybe an analyst day or some sort of event. Is that right?
Well, because you're buying an option contract, that's, by the way, a great question. You're buying an option contract that you want implied volatility to go up, and that earnings helps that. Usually as we approach an earnings date, that expiration will even increase more in volatility than the front month option contracts. Okay. So that takes out that piece of the puzzle in trying to put that trade on. And we're not going to ride it till earnings. If everything goes right, we're out before that first expiration date.
So you're waiting for 118.
Yes, 118 is where we're looking at right now. So we're kind of hoping we get a little bit of a bullish forecast on this. We get a little bit of a drift up. We don't want it to skyrocket to 118. We'd like it to take a week or so, but that would be the ideal scenario. All right, so let's look at the actual trade then. So if I pull it up, this is actually the Ally Invest option trade ticket. This is the full page ticket. So if we're looking at this, we're selling the January 24th expiration, 118 strike. We're buying the January 31st expiration, 118 strike. We're doing this for a net debit of 170. Now that's the midpoint. That's where you want to work it. But this is a fairly tight market, and that's one of the nice things about PayPal is that it's a very liquid stock. But so I would put it at somewhere at the midpoint of 170. That means that's going to be our max risk. Our max risk all the way up to that first expiration date is $1.70. When we pay for something, that's usually the max risk of that trade. All right, well, that's it for my portion. Let's get to some of the questions out here. I'm hoping that people have been typing feverishly in the question and answer box. And
if they haven't, they can continue to type those questions in. We'll get to them. We'll start answering some questions now. I think there's an initial question from New to Invest. Can you explain why you picked the expiration dates that you did? I think you kind of touched on it.
A little bit, but yes. The expiration dates in general, we're doing this because we want to own the expiration that contains the earnings. In other words, earnings are going to be announced before that option contract expires. But to me, it's also important to note that we kind of have this nice little period in that we have a 30-day and a 15-day option. So I don't really want to sell the 21-day option because it's too close to that actual earnings. I want that large rate of decay happen quicker than being an additional week. So that is a great question. So overall, I'd rather do the 15-day option contract for the short option as opposed to, let's say, another week out, which would be the 21-day. All right, so let's look for another question here. Well, overall, as far as the markets are concerned, PayPal versus Visa, it looks like someone is interested a little bit more. Why did you pick PayPal over Visa?
Well, PayPal over Visa or even MasterCard really I decided to take a look at PayPal because of that 15% pullback last year, because of the performance was below that of these two high-quality peers in 2019. Visa and MasterCard just really had blowout years. And plus the opportunity for growth within PayPal, I think, is a very significant tailwind for them. I mentioned the Venmo trend. They're also doing other partnerships and things like that. So I think from a fundamental perspective, they're doing the right things to help push that earnings growth number up 14%. Like I said, it's a deceleration from what they're expected to do in the full year of 2019, but that could be a low bar set by Wall Street analysts. So we can see there being room for upside there as well. So.
Well, that kind of leads us right into the market recap there with that question, and kind of sums up one of the recap points. But first of all let's look at the market index. Let's recap what you're seeing going into 2020.
Yeah, the recap there is really that the market's still showing strength going into the week at the beginning of the week here too. So we feel optimistic about that. But there's a lot of information that's going to come out this week, and as the market digests earnings, it might be a good time for the market to take a pause, because it's run fast and furious into the end of last year and the start of this year. So we'll see. We're going to see if companies can beat those earnings expectations. For a 2% decline on the S&P 500. They usually always beat, by the way. I hate to give you the spoiler alert there, but to the extent they can beat much more significantly than expected, that'll be a huge positive for the market and for it to continue to support the upside within the market.
All right, and then you kind of touched on the stocks, so just a little bit on PayPal.
Yeah, on PayPal, you know, it seems like an interesting opportunity from a fundamental perspective, and then you can end it out with the option strategy on that.
Yeah, and so with the option strategy, now important that these aren't meant to be recommendations. We're just looking to do these trades as paper trades, and in particular, if you've never done a trade where you have two different expiration dates, that adds the level of complexity. So one of the things that I strongly suggest is putting this down on paper and watch how the price of this entire trade changes as that first expiration approaches. So in general, I like the call on PayPal overall, but I like to get into the earnings season because that's when option traders thrive. That's when people like to look at these trades. And this is one of those trades that really emphasizes, well, I'm 30 days out on an earnings. What's a trade that I can do to get ready for earnings? All right. Well, overall, that's it for today's stock play of the day. If you could, please hit subscribe and ring the bell to make sure that you get all the alerts going forward for the stock play of the day.
And be sure to tune in next week, next Monday, same time, same place. We'll be right here at noon.